Hello and welcome back to Go Fund Yourself. Today we're going to talk about internal performance review done by Fidelity to determine which type of investor is the best, looking at accounts between 2003 and 2013. Hello, my name is Andrew and I'm not a financial advisor. So before investing into any stock, make sure you do your own research and your own due diligence. And if you haven't subscribed to my channel yet, make sure to click that subscribe button and click that like button too to help me reach more audiences. Now when we have this all out of the way, let's talk about this legend in investing circles. Fidelity, when conducting internal performance review on their customers' accounts from 2003 to 2013, they have learned that the best investors on their books are dead. Just guess who was in the second place? Well, the customers that forgot that they made an account and were completely inactive. Unfortunately, Fidelity have not provided a lot of details on why inactive accounts perform best. Let's speculate a little bit. Why did the people that passed away perform better with their returns than people that are still in a game? Firstly, I believe that there's no temptation that could affect someone who is dead. The bad economic condition, negative economic predictions don't affect them. If the stock price goes down plummeting, there's no paper hands to back out of it. Any negative news on the company will not reach them. Basically, they're not affected by any emotion, and that's a big problem for a lot of investors that are still in the game. For example, selling stock due to certain emotions, panic, stress, etc. We all know that a lot of new investors loves to buy stock when it's high and sell it right at the bottom. And I'm guilty of that myself. When I started, I would see the price plummeting down and I would just panic sell it for some reason. Now I know it was a mistake when I look back on it, but it definitely was a good lesson to learn. Especially considering when a typical holding period for a normal investor is only 6 months. When an investor holds the stock for such a short time, they're not participating in the growth of the business. It's basically a guessing game between short-term news and expectations. And the returns depend on how will the other people will react to these news. My theory is that people are too quick to change their mind on the stock they have. We have a very short attention span and it's just getting shorter every single year. Some of us jump on the next opportunity we see, others start panic selling because the stock prices are going down. And in a lot of cases, they see this as a permanent destruction of their wealth and not as another opportunity to buy in cheaper. I always try to buy that dip, but in recent weeks, it just keeps dipping dipper. So this study itself reinforces the Warren Buffett idea on the perfect time to hold the stock, which is forever. So what could we learn from this study to become better investors? Well, first of all, I wouldn't suggest anyone to go and die to become a better investor. I recommend that all of us should try to get at least a little bit of patience and try to look at the long-term horizon for our investments, which in a lot of cases is quite hard to do. Leaving your money for a single year, for 2 years, for 10 years, and not moving it anywhere. Even when the market starts trending down and you're planning to sell your stock, revisit this video and remember that this study shows that the best investors are either dead or the ones that forgot in their account are basically inactive. Of course, make sure all of your investments are investments into a solid companies that will last for a long time. If you have done your research, if you have done your due diligence and believe in the company, I think you should be fine. Well, that is it for today. I love a good discussion on my channel, so be free to leave me a message. Thank you for watching, and if you learned something new today, make sure to like and subscribe to my channel as well. Have a lovely day.